We take a look at 2023, ahead to 2024, and some of the big storylines that have been on our minds. In the meantime, how about gasoline prices? Patrick De Haan is with us, head of petroleum analysis at Gas Buddy. Glad you are with us because we saw some big swings in crude oil, so much so that people were saying $100 oil, $60 oil. What would you say about the range that we saw, which really was probably 65 to 95, roughly? I mean, what did you think about that range for 2023, and what does it tell you about the range for the future?
Well, Nicole, certainly we had our fair share of ups and downs, some surprises peppered in, but I think most analysts made a pretty accurate call for oil. Now, as you mentioned, it was just a couple of months ago, prior to oil's decline, that some, including myself, were thinking that oil prices could get closer to $100 as OPEC was cutting production. But we've really seen a slowdown in the economy. There's certainly high interest rates really eating into the intensity of consumers here in the United States. Gasoline demand has been rather soft. Certainly various banks seemingly lowering expectations for next year on the imbalances created, the economic slowdown. I think we're going to continue to see this range into next year. Of course, wild cards persist, the Middle East, and of course, with the situation in the Red Sea right now, certainly something to keep an eye on. But I think next year is going to be a little bit cooler in terms of oil prices, maybe a little bit less volatility. But overall, I think the economy will likely continue to increase, or certainly GDP increase next year. And that will lead to a more gentle year than we've seen this year. We continue to see the rear view behind things like COVID and Russia's war in Ukraine. I think that will continue to help markets rebalance.
Right. And look, when we look at inflation, the prior year of November 2022 was over 7%. Then November of 2023, it was, what, 3%, right? 3.1%. Part of that coming down on inflation was gasoline prices. We saw that fluctuation, but that helps folks when they don't have to pay as much at the pump. And that factors into those inflation prints that the Fed looks at. When you think about gasoline for folks going forward and the historical perspective that you have, any thoughts about how that will factor in going forward?
Well, Nicole, as you mentioned, we've had a couple of years of above average gas prices. The national average back in 2022 was almost $4 for a yearly national average. We're almost 50 cents lower than that this year. We're likely to close out with a yearly national average of about $3.52. And that's going to pave the way for likely a little bit more improvement in 2024 as gas prices likely to see a little bit of an improvement on this year's fall compared to last year. Now, another point worth mentioning here, the price of diesel, while the national average for gasoline is certainly quite a bit lower today than it's been in recent months, potentially the bigger story here on inflation is the price of diesel, which is now below a national average of $4 a gallon for the first time since this summer. And of course, with the economy relying on diesel for transporting goods, certainly an improvement on diesel now certainly could set the tone for an improvement on broad energy prices in the year ahead. So it's been a good year. I think next year, 2024, is likely to see continued improvement in both gasoline and diesel.
Yeah, and there was a moment where we had diesel and it was more expensive than gasoline. And it just, we've had these moments that are back and forth when it comes to that, and a lot of deals too. I mean, the three that come to mind: Exxon with Pioneer, that was a $60 billion deal; Chevron Hess, $53 billion deal; and Oxy with Crown Rock, buying Crown Rock, $11 billion. Do you see more of that happening in 2024?
Yeah, a lot of mergers and acquisitions here this year. Consolidation, a sluggish environment may keep the door open. Of course, the cost of borrowing. There's been a lot of M&A, not only at the upstream level, but downstream as well, as stations and C-stores pivot for the future with EVs. They've become well aware of the value of real estate. Look downstream at BP's acquisition of Travel Centers of America. There's a lot of that happening. And I do think that consolidation will continue into the new year, especially if the Fed does start to lower interest rates. That could potentially give more value to potentially M&A activity continuing to the new year. So I don't expect that to go away, and there's still maybe a couple of deals in the pipeline that could happen in the months ahead.
I was surprised at one point, Patrick, where I saw how much U.S. production was happening. I know we hadn't refilled the strategic petroleum reserves, and that's something that is on everyone's mind. At the same time, a lot of folks are putting for energy independence for the U.S. U.S. did okay with production output throughout the year, right?
Yeah, we really did. We saw a slow but steady input. Oil producers certainly have been much more nuanced in bringing additional production back online. Of course, the latest chapter of a decrease in oil prices has maybe slowed some of that down a little bit. I would expect that 2024 would probably have less growth in terms of production increases than what we saw in 2023, especially if we do get this much warmer than average winter. That certainly could cut down on consumption, and that could limit the upward potential of the prices. So certainly another year in which we've continued to see these trends, but I would not expect production next year to see as robust of increases as what we saw here in 2023.
Patrick De Haan of Gas Buddy, thank you for being with us. We'll see you in the new year. Thank you.
Thanks, Nicole.